CC double. Okay. Well, try to see if it works, and then we can.
Yeah, I mean, I can just be an idiot and.
By the way, I opened the Stonk Chat. What's it called? YouTube channel. So now we can live stream to that. So that's good.
Oh, sick! That's sick.
Yeah.
Okay. We're live now, yeah.
Yeah. Cool.
So okay. So I guess I'll just kickstart off with the share screen.
Yeah.
That can be
So it's been quite a week. Well, a lot less than last time, though. Okay, hang on. Let me add you. Okay, perfect. Nice. So, did you make this?
Yeah. It's like I just did this now because it's kind of funny, you know. It's just, yeah. It's good to laugh about other people losing out on money.
Have you seen the Burj Khalifa one? Where you do the Burj Khalifa analysis, it just goes up and all the way back down.
That's basically what happened, man.
Yeah.
Let me quickly. I'm just checking our stream. That's chill. Okay. That can be shut off. That's shut off. All right, chill. So, yeah, how do you want to start
this? Okay. So the other week was actually a pretty monumented week. A lot of stuff happened. Nobody really knew what was going on. And then for some reason, the past week, everything's been a lot more chilled out, and people didn't really care anymore about this whole GameStop thing. I mean, it just ended up being, from what I read, was essentially all of the platforms made a lot of money because a lot of people were trading, so they made commission. And a lot of retail traders lost a lot of money, and that's pretty much it, right?
Yeah, I mean, if you kind of were to sum it up, then I guess to the extent to which we know what is happening, that is exactly what happened. As I have on the screen now, GME did indeed go to the moon, and by that we mean, you know, you had a bit of hype, everything around it for about a week before it came crashing back down, and now we're yet to see what happens. It's definitely not the end of the story, but essentially part of the buying pressure that we saw help fuel last week's surge, or, you know, from 2 weeks ago, it lessened a lot, because short interest, if we look at that, that's fallen to about 53% before, as kind of GameStop's price was surging. That was at around 113%, 120%, depending on which statistic you looked at. So even though the share price has been falling and had fallen this past week, there was a lot less volume traded in general, but even though the price was falling, the short interest was also falling. So part of the kind of mantra behind what Wall Street Bets was doing was the idea that there was a lot of short interest, and if we squeeze them out, we're going to make a lot of money. Some people made a lot of money. Those who sold into the rally definitely did. But, you know, in GameStop, the short interest, as I said, plunged to about 53% from way over 100% last month. And now we're back to this situation, and where, like you said, money has been made, money has been lost. It seems to be kind of quiet, but I think what's happening underneath this is a lot of big tectonic shifts in terms of how the industry operates. And there's a few interesting ways to kind of look at this happening, because, again, like you said, although it's been kind of quiet in terms of there's not as much news and hype as we saw the week before, there's two main things that happened to the capital flows and the flow of money from this. So obviously, first thing that we saw was a hot topic on the Wall Street Bet subreddit actually now buying into silver, which apparently also had a lot of short position from big banks. And the idea was, you know, we're going to rinse and repeat this tactic. The problem with silver is that it is a much larger market with many more international players. And whereas GameStop was a small cap with 50 million shares in public float, silver is an industrial metal. It is a market which really tests. It's much deeper, let's say, than GameStop was. And I'm going to show another slide here, essentially. So its spike rising to its highest level since 2013. And again, that was accompanied by a large flow into essentially of retail money into silver ETFs. And obviously, paper silver in terms of silver ETFs is different than physical silver. And even though I think, specifically iShares Silver Trust, SOV, their 3 best days on record, I believe, were Monday. That was the first day highest on record. I think Thursday was then the second, and Friday was then the third highest. So the 3 highest days on record in terms of inflows into the fund all happened within the past week and a half in those 3 specific days. But even though on Monday we had an intraday spike of silver from supposedly retail money of 10%, we saw the silver price spike. It actually then closed lower on the day. So if you bought at the onset of the day at the market open and you sold at the end, you would have lost money. So there was some hype, but at the same time, nowhere near the potential for a short squeeze or whatever that one might expect from doing this same stuff with GameStop. Again, I think this just comes down to potentially mismanaged messages of this kind of social collaboration and collusion, if you want to call it, with Wall Street Redditors, Wall Street best Redditors, and the actual then that being contrasted with the nature of the market, right? So what we saw is that
why would they actually go in and do it with silver? It seems, as you said, it seems a bit odd that they would try going silver if there's so much, and it's probably worth $500 billion. There's no way the Redditors can pay.
Yeah, exactly. So there's a few kind of theories and reasons to explain that. One, I think the first one that you might expect is these people's inexperience in terms of not in the terms of me calling them dumb, but as a whole, mismatched expectations of the silver market, the extent to which prices can adjust, or the same way you can go out and buy a stock or an option, you can't buy silver, for example, especially over the weekend. I believe if you that there's a podcast by a man called Peter Schiff. He owns a large business which takes care of gold and silver purchases. So, for example, you can go buy silver from him, and he essentially talked about the idea that when you go, especially on the weekend, to buy silver, from the idea of the business selling the silver, this mass and unanticipated surge in the demand for silver doesn't essentially allow you to print more of it or create more of it. If anything, people are going to be paying much larger premiums for it over the spot price. And again, there's a mismatch between expectations, right? Second, actually, theory is the idea of there were, again, some short positions in silver, or it was potentially actually silver futures by big banks. I think Goldman Sachs name was thrown about. But the mechanics between silver is the usage of futures as a hedge in terms of silver purchases today. So, for example, a lot of people exactly don't know this, but the way that sometimes silver is bought and sold is that when you buy silver at the spot price and you buy physical silver, especially from the ideas of these brokers and these kind of bullion vaults or these businesses, they often hedge their risk with potentially, if they're holding silver, maybe shorting futures, or essentially the idea behind the paper silver, which was the one then being which saw a lot of the money flow into in an attempt to a short squeeze, is essentially the mechanic of how the silver market functions, as opposed to these evil corporations or evil banks necessarily trying to short silver and crush its price. So there's that. And also there's a third kind of more conspiratorial theory, is the idea that members of hedge funds and people who are losing out on GameStop essentially engineered some sort of hype on silver in the Wall Street Bet subreddit, therefore, kind of getting the brigade, to go into silver next. But those are just 3 different ideas. Again, mismatch of expectations and the reality of the silver market, misunderstanding of the mechanics and what hedge funds and businesses use the futures and paper silver for, and then also potentially kind of like a smoke screen type thing, or like carrot on a stick. But yeah,
I think the third one you mentioned, I think that's very viable, and it's the Wall Street Bets chairman and all of these like big figures in that community. Like we don't know what their intentions were or who they are. They might just be somebody who got very smart and said, "Hey, I can make some money with this," make people excited about something.
Yeah, for sure. I mean, the way I see Wall Street Bets right now is just a massive game of failed Chinese whispers. Essentially, a game of Chinese whispers, which, for those of you who have been at Wall Street Bets for some time, or have kind of known of the subreddit, have been accompanied with it before this big hype, especially like last year, there was a few 100,000 members, maybe like somewhere around 1 million. These were very high risk, high reward individuals. People went there to basically gamble with options. They went there to burn their money, really, obviously at the expense of gamble at the expense of burning their money, or alternatively making higher returns. The problem with that is that over the past month or so, around 7 million now new members have joined. And so initially, when the message was, we're going to short squeeze GameStop, this is a crazy idea, we're going to make a lot of money, they're okay with losing money. I think on their subreddit, they have something called loss porn, P-O-R-N, in terms of posting your major losses. And you can only post your major gains if you also showcase your losses, right? It's an interesting kind of idea of transparency in this community. But at the same time, they show both sides of the same coin. And so that's their game. But then when people came across the subreddit, started joining on the hype with their $600, with their stimulus checks, with their mom's savings, whatever the hell, it became, we're going to stick it to the man. We're going to give it to the hedge funds. We're going to make them pay. Good luck with that. And it doesn't even matter if I lose my money, right? That's what people were saying. I have resentment for the Wall Streets. I have this, that, and the other. I don't even care if I lose my money. Now, that is very ridiculous, but at the same time showcases how the message can be almost weirdly translated, again, like just a game of Chinese whispers. And the problem here becomes that Wall Street Bets, or at least some of the people, it becomes almost like some sort of like financial terrorism, or like a weird religious cult, because they have this fictional idea of this religion against Wall Street, this idea that I can go in there and lose my money, but I'm going to make them pay, right? It's like these young radicals, which again were radicalized by this kind of idea, and they were fired up. And hey, they're willing to do that with other stocks, or they're willing to do that with silver, right? So it's very problematic, and it needs to be looked at this interesting lens of like this kind of weird young radicals, this weird, again, these fictions which enable these 8.5 million people to cooperate and try and cause a short squeeze on a stock. But it can be quite dangerous, right? Especially when it's seen as a pump and dump. But at the same time, it's a byproduct of how we've enabled people to communicate freely, trade frictionless, zero commission trading, and essentially have access to all sorts of markets data and other investors, traders.
But do you think it's because I agree with you in part? It's people, they're a bit excited, they're getting on the hype train, and then they invest. But I also think it's a justification, right? So if I'm here today, or like a week or 2 weeks ago, and I saw that GameStop used to be $60 and now suddenly it's become $200, I want to YOLO it and make sure I make some money.
Right.
And the way they justify it to themselves is they say, well, shit, I know this is probably not a good idea, but I need some social affirmation for doing this. And so then they put it and they go like YOLO, and this is my justification. I know I'm probably going to lose, but this is actually my reason. And that's how they cope with the stress. And I think that's how it works. And then the loss porn, or sorry, is that what it's called? Yeah. Loss porn. Yeah. It's the same. You've got the two sides. You've got people who are quite interested in never get to see huge sums of money and see like negative 80% or plus 200%. So that's one side of the equation. But then the other side is for these people who've lost so much money to deal with it. It's like, okay, I've lost my entire portfolio, but at least I get some social affirmation. That's why I think it became so popular. But
for sure. But I guess I'm reading this book now called Sapiens, and the author talks about how it is that as a species we're able to cooperate in the hundreds of thousands and millions, right? And it's with the idea of believing in certain fictions. Now, whether or not that is religion as a fiction, that's not my point. It's the idea of believing in the larger idea, even legal fictions. For example, the LLC, right, as a business. If you look at the company of General Electric, if you take out the CEO, the company still, they're going to find another one that still exists. If you take out some of the employees, they're going to move on and exist. If you switch it all, as you did over the past, for example, 50 years or whatever, 60 years, it's like you're changing the parts of the ship, but the ship still sails and it's still parts, still one part. So it's these kind of fictions, these ideas that people believe in and allow it to cooperate. And we've seen the same with Wall Street bets. Because again, remember, this is at the magnitude of, last time I checked, 8.5 million subreddit users, right? That, even if 10% of them cooperated, that's still nearly 1 million people together working together and buying and selling this one security and holding each other in the stock. And it's ridiculous. And that is, again, this idea of sticking it to the man, or this kind of social affirmation. It's their justification for losing money and not understanding something, yet diving straight in.
So let's have a look at why the stock dropped. I think it was after the weekend on Monday. Yeah. It just crashed completely. I mean, essentially how I saw it was that, one, people were like, shit, okay, we're not actually going to stick it to them. The banks and Wall Street, I was the one anyways. And two, I think they started being quite scared of losing all their money. And so as soon as they saw the price drop, everybody started selling.
Yeah, I think what we talked about even last week is the idea that this weekend gave them like a delay, like a breather, like holy crap, for especially the 5 days where it was wild, it was crazy. People were just stuck in the stock going up, the noise, the hassle, or whatever it was firing them up, it kept firing them up. Over the weekend, things got a bit quieter. People saw that there was serious problems with the financial system that they were causing. When you're looking at the integrity of Robinhood and the integrity of the actual market at large, from the broker's point of view. And it was the idea of, maybe like a loss in belief, that there was like the fire, which gave people the kind of energy to keep going and keep buying and keep sharing, and haha, Reddit, subreddit, I'm going to share my losses or gains or whatever, I'm going to be rich. That just kind of died off slowly, quite painfully. We saw a spike later on, like with the Mule on the week after, but it was nowhere near anywhere that was meant to be going. And this is partly because the downfall of the stock is partly because Robinhood, for example, stopped the trading, or specifically stopped the buying of this stock. And so there was less buying pressure. And again, with that comes the difficulty of, okay, how quickly can I move my cash from this broker to the next? And how much do I actually want to buy it? Because that impediment, not only to purchasing the stock, is also an impediment to my belief in this greater idea, which isn't as much of a strong idea as people thought initially. But at the same time, those who are meant to make money made their money. Those who sold into the rally, they're fine. And also, one thing that I want to point out with the deep fucking value, the user at the kind of forefront of the media attention and all that was happening with this stock, I saw that he was posting daily updates on his positions, showcasing that he's still holding and he's making millions and he's losing millions every day. And people in the comments kept saying, if he's holding, then I'm holding. But the problem with that being your North Star is the idea that this guy, I believe this is true, and I don't know if everyone knows this because I heard it somewhere. The guy is 34 years old and he's a wealth manager with a CFA. And he knows very, very well what he's doing. People thought of him as some dude in a basement, whatever, cool Redditor. I'm sure he's a great guy. But he was there at the start. He was one of the first, if not the first person to kind of get this idea started. He was posting about it, this, that, and the other. And if you look at his positions, he's still making the millions. And the idea behind is that you shouldn't be focusing your actions on the results of another person and how much money they're making, when really, like I said, he's millions up front. So whether he makes 17 or 21 million or something else, he's going to be completely fine. So that was a weird North Star that people chose, but yeah.
Fair. Okay, that's super interesting, because that means that, as you said, you get this whole narrative, and then it turns out this guy was just some basically Wall Street guy. He was just smart and invested early. But yeah, because I think he bought it way back, like years ago, when he was like, okay, this stock is actually worth a bit more than.
Marco just left. And he's joining back. That's interesting.
Yeah,
hello.
Sorry. Hey, I think my internet.
Yeah, you're lagging a bit.
I'm dying. But yeah, cool. Okay, that's super interesting. So, like, because the whole narrative is like unraveling, And where do you think people are going to go now? Because that used to be their excitement. They were in lockdown. They couldn't do anything. This is what they were hyped. There was a community. Where are people going to go and find the next high?
It's an important question to ask, because I think what we have learned this far is that this is something that will definitely stick around, especially when people have seen that there is money to be made, obviously. Now, whether that is specifically Wall Street bets, Redditors, or maybe other investors, investment management firms manipulating these crowds to make money off of, we'll see what happens. I think if anything, it's going to stick to small cap. Maybe they'll become activist investors. Oh, actually, yeah, there is a perfect example. I think, and this could be either the CEO of GE or GM. I'll quickly check, because actually that's this topic of activist investing, which this Wall Street Bets crowd might turn into, might as well be part of where they're going to head from here. Let me quickly check, however. GE and GM CEO. No, okay, it's definitely GE, I believe. But the idea with activist investing is that GE, essentially, based on their stock price, is meant to give out a large bonus to its CEO. And so what these people have been doing, or at least the idea behind what they want to do, is that they're going to short the stock and prevent it from going to such a price that this CEO is going to get I think it was a 37 or 47 million bonus on top of the job that he's doing, whether that's good or not. And it kind of paints you an interesting picture. I wish I saved more information on this, but it's an interesting story. You get the gist. It's an interesting kind of way of looking at how this crowd might behave in terms of trying to ratify some social issues if they deem that to be an issue, or keep these stocks or firms in check if they have the power to. I mean, that's a few million then with money, in terms of ESG goals or whatever cause is important to their heart. Right now, specific stocks and pump and dump schemes, I don't know, but this is one avenue where Wall Street Bets might get themselves into. That is activist investing based on what they believe is right or not. But again, this kind of contradicts with the real Wall Street Bets that you might know if you were there a month and a half ago, before this all was fired up, a year ago, a year and a half, 2 years ago, right? This is complete. You wouldn't assume these idiots to be in the same, basically, used in the same sentence of activist investing, because it's very much not what they do, nor what they did. But this new Wall Street Bet subreddit with 8.5 million people who now more than ever want to make their money back for sure, might go down that road. Nevertheless, what's also important is, I think maybe I mentioned at the introduction, the kind of tectonic shifts that we're seeing in the industry because of what Wall Street Bets has done, or at least they were part of. It's actually the idea of, or the movement from long-short funds away from their short positions. So, for example, Bill Ackman's Perishing Square announced that he no longer has, his hedge fund no longer has, any short positions. They exited out to the end of January. They've exited all of their short positions because, for example, it was too much of a risk, right? That there were some genuine problems, which if it happens to another hedge fund, well, just like Melvin Capital, they might lose half of their assets in a month, right? After the injections on top of that, right? So there's some certain problems, and it just kind of gives you the idea that because now over the past month or so, or specifically 2 weeks, there has never been a greater intrigue of investors and people in the short interest of companies than ever before, right? So now people, especially at the onset of the GameStop mania, we saw a lot of people looking for other small cap stocks who have, kind of these short interests which were high enough to be used against these hedge funds or whoever had shorted them, right? And so hedge funds, for example, that of Bill Ackman, has exited their short positions. And it's also why we saw some decent stock market gains over the past week after the kind of fears of what might happen to Robinhood and the brokerage business. There was some negative coronavirus news, especially coming out of the EU. But these together obviously provide the idea of the bounce back of the stocks after the fears had subsided, when Robinhood got some capital injections. We'll talk about that in a second. But at the same time, then on top of that, hedge funds at large were looking long positions rather than short, which obviously under short positions are much more subject to some of these problems, as we saw with GameStop, as we saw with AMC, and I think it was like 22 securities in total. What we saw potentially with silver, although that's a weaker example, nevertheless an example. The silver ETF on Monday SOV did still jump 10%, or the futures contracts, whatever.
Is there something called long interest?
I don't know, maybe, but I assume that if the short interest is 50%, then the long interest is going to be 50% as well. But I've never seen that statistic. I guess it's not as potentially intriguing as short interest is for whatever reason, but I don't know. Don't necessarily have an answer. It's interesting.
Yeah, I think that's something we should look into, because if these activist Robinhood investors, they went against the people who shorted, they might be able to find some companies and some stocks that hedge funds have longed, and then try and take them down that way. Because there's no reason to. You just post on the forum and it gets a lot of traction, and people get excited about it. And why not? Screw the suits. I guess it's a different narrative though, because with shorts, you're saying, oh, this hedge fund is evil, it's trying to make this company fail. If you're longing a company, you're basically saying it's probably going to do well. So there's no real narrative there.
Yeah. I think what was special about the GameStop case is the short interest being over 100%. So it wasn't necessarily the idea of, is the firm going to survive and thrive, or is the firm going to collapse? It was the idea of these hedge funds definitely overstepping some of their boundaries, as per people's opinion, and that specifically was able to be exploited, as obviously to a certain extent it was. Nevertheless, it wasn't the same as just kind of looking, are they long, are they short? It was the extent to which they are short in this case.
But it's good because you mentioned that now other firms are shorting less and they're coming out of their positions. So there's a bit of a market correction, which I think is good. They react, they adapt.
Ooh, that's interesting. I think shorting is quite necessary, or at least the ability to be able to short freely is necessary, because you have fraudulent firms, you have firms which, again, whether it's fraud or poor fundamentals, are, let's say, overvalued completely. And what shorts do, or at least hedge funds which short, and so there are some hedge funds. I think Chanos, Mr. Chanos, don't remember his first name, is a prominent hedge this kind of investor who figures out fraudulent firms, showcases reports and essentially evidence to showcase that idea, shorts them, and makes money off of it, right? And that's fine. He takes on the risk of that, but at the same time, then profits off of the fact that these firms are fraudulent. These firms fall, their stock prices plummet, and it makes business, the market, potentially a better place. So the removal of shorting completely, I wouldn't necessarily say that's a good thing, as much as shorting the extent to which we saw Melvin Capital do, it might be a good thing. It's not about good or bad. It's the idea of there being the potential for the kind of natural forces of longs and the shorts to enable good companies to prosper and fraudulent companies to collapse. So that's a debate, but that's just a different side of the argument.
Fair. Okay. So now we're gonna convince the whole Reddit community that shorting is okay.
Yeah, I mean, as per their kind of opinion, stocks only ever go up. But at the same time, it's funny, it's naive if people take it too seriously. But again, I think that we're seeing in terms of moving from short to long positions on the long short fund is it's intriguing, but at the same time, we can only wait and see what happens as a result of that, right?
Sure. Do you have another topic you want to talk about?
I think quickly we can also cover the story of Robinhood.
Oh, cool. Yeah.
Robinhood, essentially, because Yeah, this is something that I said earlier. It's the idea that, yes, Robinhood did steal from the rich and give to the poor, but at the end of the day, he was still a thief, right? And so it's an interesting irony in the name that they chose, but it's only then justified by potentially the actions that they did. And so Robinhood was, let's say, in a pickle, specifically on Thursday when they first halted the trading because of the clearing houses and how they interact with them. So I can give you an example. Essentially, the idea is that whenever people make a trade on Robinhood, long, short, buy, sell, whatever is happening for that transaction, for that trade, Robinhood has to give up some liquidity, some reserves, fulfill the liquidity cash requirements at the clearing houses for the risk they're taking and managing managing the exposure. And because of the 2-day clearing period, which takes which is a result of every trade, it's not instantaneous. And so, for example, for 2 days, Robinhood has to essentially shore up some liquidity, some reserves to fulfill those requirements and the risk. And when trading increased, they have to give up more capital. And when the volatility increased, the clearing houses required more capital from them, right? They bumped up the requirements. I believe maybe this was mentioned last week. I think initially the clearing houses required 1%, 2% of each transaction's value as a kind of risk management as the reserves. When the volatility increased with GameStop and other stocks, that increased to like 5 to 10%. So the more transactions, the more volatility exponentially increased their kind of cost. Really, it was a certain cost. And the interesting problem here is with Robinhood is the idea if one person buys GameStop at 100 and then sells at 400, and another person obviously buys at 400 and then sells at 100 when it falls back down. Even if these two people are on Robinhood, such that when one person gains 300, the other person loses 300, Robinhood's cash essentially position doesn't change, right? They're net zero, but they still have to give up liquidity for these two transactions. So even though the firm is not better or worse off necessarily, they still have to give up that liquidity and give those reserves up. So here was a key problem, which prompted Robinhood to at least one of the reasons might have been to have that trading halt. Over the weekend, essentially Robinhood gained more capital injections from its investors and actually negotiated down the $3 billion initially of margin deposits, which the clearing houses asked for, down to 700 million. So there was potentially more problems that could have arisen from this high volatility, high trading, but then Robinhood somehow managed, right? So that's kind of what we saw. But Robinhood's total fundraising went up 3.4 billion US dollars after it also secured 1 billion on the first day of the trading halt. So it secured 1 billion, then 2.4 over the weekend. So nearly 3.5 billion worth of equity, worth of cash, over this 4-day period, which is quite insane.
It's crazy. So basically they can say, oh, it's not our fault, it's the regulators who want us to hold this.
Interesting topic. I think a large problem was posed by the regulation and the 2-day clearing period. And you might ask yourself, well, the technology that we have around us, why does it take 2 days for the clearing to happen? And because of that, the liquidity requirements, right? That's certainly a valid concern. I do know that I believe blockchain to a certain extent actually solves that problem with the idea of instant clearing or at least more oil in this machine in terms of making it more quick and efficient and forgoing some of the margin deposits that Robinhood might have to cough up. And it's an interesting theory because, hey, at the same time, if we had no regulation, Robinhood could allow the trading, that there was no liquidity requirements, this, that, and the other. But at the same time, this then promotes the idea of limitless trading and orders. And well, that, to a certain extent might kind of exploit retail to a certain extent. But nevertheless, retail was still at a very big loss because of the trading halt. So it's interesting, the battle between regulation, free market, letting people trade, and at the same time, who knows what could have happened if there was limitless trading? Who knows what could have happened if there was no trading halts, no damage to that kind of spirit of we're going to stick it to the man, to the stock, to the price of GameStop. Maybe it could have kept on rocketing up. Who knows, right? But I guess because of these regulations and the trading halt, and just the fact that Robinhood is still a business and it needs to make money and it needs to not lose money below zero, or at least specifically still have the cash to cough up in terms of its business operations. I mean, liquidity related constraints, requirements, you know, there's a few factors here at play, but regulation definitely posed a problem in terms of, or at least it was causal in the trading halt for sure.
Yeah, but I think that retail investors, it happened. I remember in the past with Robinhood where people weren't able to buy or sell certain stocks months ago. And so people were aware that it wasn't the most reliable platform if you wanted to have full control of your money. But they chose to go there anyways because they thought maybe it was easier, it was cheaper than other providers. So I think next time, if people want to have full control, they'll pay more for a better provider. And if they don't, they stay on Robinhood. Like,
For sure. I mean, that's it, right? It's a commission-free trading. And of course, there's no such thing as a free lunch in terms of your order flow gets sold and front run. But nevertheless, there is the idea behind it. Okay, if you really want more autonomous trading, or at least, you know, have a better provider, not just because Robinhood is like a tech company, right? It's not necessarily a brokerage firm insofar as it has pioneered the space in which it operates because of technology and this, that, and the other, and economies of scale. But the idea is that, you know, and it's good that it's come to light. People have to just do some more due diligence, not only what they're investing in, but how they're investing, right? Do you want to pay $5 per each commission, per each transactions commission? Do you want to pay the $20 monthly fee, but for a better provider, for a better brokerage and, you know, service provider in that area? People should be asked that question, and at this, to be honest, they should have asked themselves that question at the very start, right? Because to just go to the platform which provides free trading and fractional shares also then entails some of the inefficiencies or problems when it comes to like a bottleneck problem, as we saw here with potentially a bottleneck problem with GameStop, with Robinhood and GameStop.
That's right. Basically, people have to pick better platforms. We're like, screw you, we're with Robinhood.
Yeah. I mean, we'll see how that turns out, but I think that's it, and that's that. You know, it's a few changes, very fundamental and tectonic changes that we're seeing in the financial industry, which will, you know, kind of result in different regulation, result in how Wall Street and the outside, quote unquote, interacts on the markets. And I think there's also scope for some conspiratorial theories, which obviously make this a lot more interesting than it really is. Nevertheless, yeah, I think that's it, and that's that. It's important to be aware of the kind of financial anarchy, as some people might call it, that's happening. Not to blindly follow crowds just because you're all outsiders, quote unquote, and take everything with a bit of salt, because it then at the same time saves you more money. You got to do your due diligence. That's it. At the end of the day, you got to do your due diligence.
Yeah, that's right. Okay. Was there another topic, or should we watch the funny video that I shared with you?
Oh yeah, you can put it on. I think that's it. We've covered some of the big news on top of kind of how that progressed since last week, and we're only yet to see how this, you know, comes out next week. See how it progresses, if at all.
Okay. Can you see this, by the way?
Yeah.
The
video.
Okay, cool.
Good chances think you go green, so you know maybe make a nice little chunk along with 1,000 shares and see what happens with this thing. Okay, come on, just keep on moving. Shit, come on, man. Well, fuck, it's got some support right here, so you know maybe it'll hang on to this 16 area, bounce back up. Come on. Fuck! Oh shit! Passes 50 shares.
Yeah. Oh my God. If anyone invested in GameStop, was invested in GameStop, that was, you know, anyone. Yeah. No, that's it. That's the reality of the market. And you know, the thing is with Wall Street bets, before all of this mass media and 7 million goddamn migrants into the subreddit. That was kind of the nature of Wall Street Bets, and people would laugh at that. That was what they expected to a certain extent, and a lot of people just kind of got caught up in this game of Chinese whispers and ended up with empty pockets.
I love that. First Robinhood takes up the rich and goes to the poor, but still a thief. Bro,
exactly. Yeah, exactly. You got to ask yourself critical questions like that, and it's funny in terms of maybe it being a bit of like a truism, or just like, oh, what a cool, very meaningful quote. But then when you actually get into the mechanics of what Robinhood did, how they operated, how that impacted the GameStop price, potentially, the trajectory of it, long-term trajectory, medium, short-term trajectory, it starts to make sense. Aside from it being quite funny in a sense, but funny for those who haven't lost money.
Any money? I think this is the lost porn we were talking about earlier.
Oh yeah. I'm surprised.
It's actually, I mean, maybe we've seen a bit of that on Wall Street, but I would expect a lot more of that now that GameStop has completely plummeted. I saw some even on TikTok of some guy losing 90% on his GameStop position, which was his whole portfolio, and he was just crying, and that's it. And it's like, it's that's the game that you're playing, right?
Bro, put your hope on GameStop.
Yeah.
Oh my god. Oh well. Yeah, I think you're right when you mentioned last time we need to educate people.
That's
yeah,
that's right.
good.
You gotta educate yourself. You gotta educate
yourself. That's it. You gotta educate people. Yeah, of course. Before that gets through Parliament or whatever and into schools and into people's minds, you'll be able to educate yourself 10 times over, and by then, or educate your son, your brother, I don't know, whoever your friend who lost money on Wall Street Bets and the kind of media and GameStop, because I'm sure we know a few. I definitely do, but
the communities, yeah. Do you want to wrap up here, or because I was going to make a comment about how he was doing the analysis and justifying it, but we can stop here.
I'm fine finishing off.
Unless there's something you want to add, yeah.
No, yeah, that's it. We can talk about it next time. We can talk about what's it called? How you do fundamental analysis, then technical analysis. Next time we can maybe chat about that and why it works.
Yeah.
And why people
yeah, for sure. Oh yeah.
That makes sense. Yeah, next time we can kind of go into depth and give some some examples of, like, even with my chart in terms of the M on GameStop, that you can add some good technical analysis.
Yeah, we'll get some good memes, some tasty memes for that.
For
sure. Okay, awesome.
Cool. Awesome. Well, thank you very much to everybody who's been watching, following. Do comment if you wanna join us. If you wanna suggest a topic, we'd love to have you. Yeah. Cool. Thank you very much. Ciao.